All right, here we go. Look at that, smack bang on 12 o'clock. And that's 12 o'clock. Well, technically it makes it the 11th now, but of course, we're calling it the 10th of the 11th. It's the Sunday, it's midnight. So, you know what, it's a little bit late, but that's all right because as long as we get the charts done sort of, prior to the market opening, it gives us a chance to sort of build a bit of an idea of, how things finished up, what's been playing out, and obviously the all important sort of see if we can sort of find some sort of trades sort of moving through the week. So, look, I'll start off with DXY because obviously, look, this is really the sort of driver of things and a lot of the things that sort of we're trading at the moment. And this chart just looks like an absolute shamble on this time frame. But look, just to sort of recap your Friday sort of trade, it was just a grind, and it was just absolutely just nothing coming through this area here. So let me just clear this kind of stuff up a little bit, so we can have a little bit more of a look at what we're actually seeing here. But look, as you can see, it was just really tight. Like this is just 55 to 44 throughout most of the day. Tried to break out the top, smack back down, came back out the bottom, jumped back up in, closed the gap, obviously on this little follow through down here. And then eventually, look, succumbed and broke to the top side. Really, this spike over here was the FOMC high, and that was, as you can see, preventing, was sort of pretty much holding that level capped there at 104.66 and that till where we are, so 12 o'clock. I think there was a little bit of data coming out at the end of, actually, let's flip across and just have a quick look. A little bit of data coming out towards the end, consumer confidence, I'm pretty sure it was. No, look, that wasn't until a little bit later. So, and look, even around that time, maybe the employment change out of Canada, unemployment rate, this could have had a little bit of an effect, but you wouldn't think this was really like the numbers aren't really sort of shocker. 6.5 expected 6.6, and also, I mean, Canada doesn't really make up a massive amount. It's actually quite a large miss on the employment change, actually, quite a sort of large shoot down there. So I guess the idea sort of being here, look, employment's down in Canada. It's expected to go down. It's gone down further than it had done. The only thing I could sort of attribute to this at that point would be the idea that obviously, of course, if it's lower here, it means, Canadian economy's in trouble. Well, how are they going to help that? Well, they're going to stimulate that with a cut kind of thing. So a weaker Canadian dollar, and that obviously makes up part of DXY, not albeit not a massive part of it all, but as quite a sort of a larger. Sorry, it's late, as you can tell. Yeah. Look, it makes up a segment of DXY. Anyway, that's that. We don't trade the loonie or whatever it's called. So that's just the only thing that I could think of that maybe got this drive coming up here. Really, though, if I actually sort of stop and think about it, I was talking to a mate the other day, and you got to sort of at least give this shot through here. Because like we sort of say with everything, there's the three sort of legs to this all. You're moving up, actually, let's do it with arrows just to emphasize the point. You're moving up, you find resistance, you move back, you find support. This is the leg that needs to come. And I think this is it didn't, by getting this little move up here and then thinking it's going to sort of like come down to the side over here, doesn't really give it enough credit for the size of the move and also the actual sort of the reasoning, potential sort of like, reasonings and things that could be coming in the next couple of months and the next sort of, couple of years effectively. But all this sort of talk about sort of, tariffs being more inflationary, and all this kind of stuff. Like, yes, I agree that this is something that is definitely going to impact and probably err more on the side of strength of the US dollar, but it hasn't come yet. That's fine. But to sort of think that, this massive move up here, this is the market saying, look, you know what? This stuff is something that we need to sort of really adjust our positions and our books for. That gave you a massive move up here. The idea that this pullback here, which is quite big, 61% pullback, would only then sort of give this little move up like this. Yeah, no. So this move up here is obviously the next move that we're looking for. So the question now is this leg here on, say, through Monday. Look, we got US CPI this week, but that's sort of later in the week. What we want to see with this point here, because obviously this is an area we had isolated. Let's get this out of the way. This is an area that we sort of had marked out. This is a sort of area that was like, okay, look, these are where your sellers are. Do we have on the daily perhaps? This is where your sellers are. This is like, the body fill here. It's obviously come up here, found some sellers yet again, and pushed it back down. So the question now is, if we link these two together, is this the high of this second run here? And what we sort of do with this now is we start to build the structure and we start to go, okay, look, the possible outcomes from here are one, this is a lower high, because here's your first high, here's your second high, so it's a lower high, and we tackle this direction here. If we're coming down this way here, what we really want to be, what we're focused on is this level through here. Those lows at that 61% there. Because this is your high, this is your low, this is your high, this is a lower high, obviously. I know this is super basic stuff, but however, this is how I'm talking it out. If this pushback here comes down and like sort of, whether it finds support or whatever down here, you've then got a lower high and a lower low, and we can start to build a little bit of a channel and pulling back here. And really, as I said, my sort of target is this little level over here. I thought obviously it would have come a little bit quicker here, but this is the area that I'm interested in because we've seen that this has been support recently. And I would expect it again to sort of give a bit more support because not only was it previously support, but it also closes the gap. And there'll be a lot of people that'll be going, I'm going to fade this thing, come down here, close the gap, and then they'll close their shorts. That'll give it a bit more of a kick to push back up, and we'll work out how high that comes as we sort of get into that kind of stuff. As I said, we've got CPI coming out this week. So that's one outcome. This is it. That's the high. It's come in here. Sellers have pushed it in, and they've said, yep, okay, we're going to push it down here. So look, to sort of get an early indication of this would be to take out this 4-hour candle here. So let's see it, and we're going to say, H4 lower high, targeting swing lows. So that'll be first of all sort of targeting this area down here where we saw the support come in. As it sort of came down, it swung up, back up, bang. So you want to sort of see, is it going to break this level here? And then, okay, these are the targets that we're going to be looking at over here. Possibly the top side of this falling resistance through here. And as I said, closing that gap. That's a down. They're potential downside targets for me. Though I do say, and I say this every week, you don't really regard the last couple of hours of the week because there's not really too many people still at their desks and that, and all the other, so most of the sort of major places have closed up. You've just got a couple of sort of like possibly sort of young intern people that are still there, last couple of hours on a Friday in the US. Asia's closed, Europe's closed, all this kind of stuff. So disregard the fact that it sold down a little bit there. It could have just been a little bit of profit taking or something like that. So top side is to see if you can get above this level here. So, if you can get up above here, not only do you negate the idea that this is a lower high, and you're coming to tackle the actual highs and potential for a continuation up around that 106 area, which then, let's pull this through here, would be the idea of moving up like this, up around that 106.20 level, some sort of flag action through here. That's your sort of idea that you're still moving up through here. The RSI as it is at the moment is not really sort of supporting a great deal. Like, yes, it's crossed over, but it is, as you can see, still pretty flat. These things are a little bit lagging, yes. But as you can see, sort of like, when this thing crossed over here, it went. This thing's crossed and it's just gone a bit flat. Again, last couple of hours of the week, so you can't really put a great deal of sort of stock into it. So this is why it's important to sort of see what happens when we open up sort of through Asia. So this little level here, this level here, they're the ones that I'm going to be looking for direction. And look, not necessarily just a little step close down. Sorry, not a close, just a little touch down here. You want to see a significant sort of like close down this side here because it's very easy. Things can come down here. People will be identifying this and calling this a trigger point for themselves, eclipse it, and then sort of fires back up. as we know it does. So, it's hard to sort of call at the moment. Look, the idea is obviously still in that, you could be seeing more US dollar strength based off what is potentially about to come and happen. The counter argument to that is that will happen and like, well, not will, but, that is a higher probability that we will see that happen. Does the market try to then sort of go, well, everybody's thinking that, run it back down here first and then fire back up after a period of sort of shaking the market out a little bit to this side over here? Because, of course, like as we saw, it was US dollar one-way trade through that sort of election period. The pullback here to 61% shows that it is, there is some sort of counter argument to this sort of move. Like, as I've said with a couple of times, with the Fibonacci, if you'd rallied from the 23 or even the 38, and then you'd gone back to the highs, the likelihood of a continuation or quite a strong continuation is obviously a lot higher. But as we can see here, there was quite a decent amount of either profit taking or people shorting and trying to sort of put the pressure to sort of really push this thing back down. I don't think this was really a point to go, oh, let's go hit some stops, because if it was, would have come down under here, because a lot of the people that got long through this period, they're willing to take a little bit of pain, a little bit of pullback through here and that, but they're not going to be having these stops in no man's land. They're going to be having their stops at a almost sort of like textbook sort of blatant level, which is a lower low, which is down through here. So now that it's rallied up here a little bit, potentially people would take their stops from down here and put their stops up over here. If it comes down here and just goes to sort of hit those, that's what will feed that move to the downside. And you'll sort of see that sort of move through there. So, look, it's been a very tough week, I have to admit. Like, if I'll get on to copper and Aussie and that in a few minutes and that, but like, that has just been wild. Like, perfect trading for like in-out sort of stuff. But, if you're trying to sort of like go, okay, yeah, I'm into a position now, bang, let's ride this, it's been super, super tough. So, you got to time these things and you got to be unwedded to any particular bias or any particular direction. But certainly, sort of come tomorrow, I think they're the levels, the main levels early in the session I'll be looking for. Underneath this level here, you look for, as I said, the lows that we had. Let's get rid of, but push this back here because it's not as relevant at the moment. Yeah, the move sort of down to tackle the lows of that swing low there. You break that there, then okay, these are the ones that we're going to be looking for as our price targets to the downside. If you go past that level over the top over here, that wick that we had on Friday night on that rally up through there, obviously you've got the actual high, which is through this point over here. But obviously, I think an earlier indicator is up over here. Full indicator is to take out that wick and obviously get a close up around this area. But that's probably 106.25 that you're looking for as a topside target. RSI isn't super convincing to push that up, but you need to respect the fact that we're up back. Now we're coming up to test. Is this going to be a double top area for us? And then, of course, as we said, double top, well, you can work out your price targets down the bottom side, but I would say your first price target, main price target, would be closing the gap from the election. All right, let's pop across. We got gold. So it rallied off the lows. It did okay, but again, as we can see, this is the drop down through the election. I think it stuffed around a little bit first, actually. Which one? So there, this was this period through here, dropped down through the election, came back up, 61%. That's where it sort of hit to. So look, it's still got a little bit of work to do to sort of even sort of get up and retest this top side over here. Can we make a channel or anything else? Probably. Not really. It's hard. Look, these sort of things, particularly when you got this high level up through here. No, I'm not a big fan. Look, I'm going to leave those lines, see if they do react at all. But I'm not a super fan of these kind of things through here. So let's clear this up a little bit. Stuff all over the place. All right. So look, we had our sort of bounce. That's fine. Move down, support, move up, resistance, move down, support. It's in a bit no man's land here because you got to sort of think, is this moving back down here to target these lows over here? It did move down a little bit, as we can see this sort of a smaller move just coming through here. But is that it? Like, are we sort of then potentially going to see it find support here and then sort of come up over here? I still think, at least 2,700, 2710 to 2715, this kind of area, a touch of this main falling resistance is a reasonable sort of level. We are sort of seeing it obviously sort of close fairly weakish, but still really within its own little range. So if we just take this back here, copy this over here, I think this is, again, what we'll be looking for its next direction. Above, look, even if, actually, let's put that up a little higher because obviously that's into the resistance there. Close outside this box. So a close above 05 or a close below 2681, I think is going to give ourselves a bit of a direction. Downside moves, well, you're looking for these areas of those lows. RSI, this is on the 4 hour, looks pretty cooked. It does look like it wants to roll over. So if it does start to move down, I could see this move sort of possibly sort of continuing a little bit down to this sort of 58, potentially 43. If it comes down under there, well, I think you're sort of looking a bit lower. It's almost a little bit of a larger, not really sort of head and shoulders kind of thing, but you can see these areas very replicated over the side as it did come down. As I said, I do believe we have a little flare up, at least a sort of touch up of this falling resistance before potentially a fail back down. But I would very much expect that we get really through this whole period a bit more of a sort of a consolidation. I don't think we're about to sort of necessarily break and then come back up to retest the highs. At the same time, the bounce and the reaction from down here was quite significant. So I wouldn't be surprised that, you need to respect that a little bit and that it may actually sort of hold through this area for a little bit sort of coming through the week. As I said, things are very tough to read at the moment. So even as I'm sort of saying this, I'm like, God, this sounds a bit wish-washy, but it's very hard to sort of give yourself a sort of clear-cut direction. As I said, like the other week, I was sort of saying, look, 1, 2, and we'll come up here, have this and start shorting up here. I missed a lot of this move coming down through here. So, it's hard to sort of think that, like, remember, if we zoom out like this, we're still super, super bullish. So let's drag this up. Does this give us anything through here? Oh, wait, I've got another gold one that I think I actually may have linked this together. Yeah, so this is a argument for the downside here was this channel, is what I found as well, actually. Which we can see obviously respected a number of times. Broke, retested the underside of it, and it's tried to push back down here, but obviously buyers have managed to sort of step in early. So yeah, look, it really is a bit of a wish-washy sort of thing. I think actually now that this is a little bit clearer on here, they're the levels that I'm looking for. What's that little breakout box? So I'd say below 80, realistically, we come back to 50. I think that's your price target for the downside. I would say that we do this. I just look at this isn't a full range yet. This is just me just seeing if I can find something that can match up because these look like they might come up pretty close if I'm just eyeballing them at the moment to sort of say that, look, top side, say move up to test over here because this would be your little resistance through here. This would be your support through here. If this does happen to range through here and we get a break of each, they're your kind of targets that you look for, 2740 or a break below 2650. So I think they're the realistic areas that I'm looking for. If we do come back down here, again, you want to sort of see, are the buyers going to step in? They step in very strong here. If they step in here again, you could be looking at a larger double bottom. If it does break up to the top side over here, I would say that this is just really, just recouping a little bit of this, as I said, undoing that sort of election day Trump trade without actually putting in a higher high to sort of say, hey, look, this was a shakeout, we're moving up. I would say that if we do move up to these kind of areas over here, this would be the move like this. And then I think we would see a bit more of a sustained push back down to the lows over here. So I do think that, look, this again is this kind of area that we're going to be sort of dancing around in. It's just a matter of whether they just push DXY higher early, we come straight back down to those lows, or whether we come back up here, undo a little bit of that stuff, close the DXY gap from the election, get gold back up to say 2740-ish, get this little measured move happening over here, back up to this like little sort of congestion area that we had, 61% retracement, and then push back down again. So they're my sort of outcomes. So really above 14 and below 80 to sort of see the direction for gold moving forward there. Silver actually traded very well. Look, this was the move that we were looking for after that drop down. I was like, look, come back up here. And this is why, partly structurally, I think gold is due for a little bit of a rally here, is because you've got this little channel working out through here. These things are magnets. And not generally do you start to get one touch, two touch. Well, this one, I suppose, just melted back down, but came in fairly strong to sort of like confirm up that channel. But again, magnet, bang, straight, moved up through here. And this is what we thought. Come up here, make contact where the arrow is, where the falling resistance is, where the horizontal is, undo this stuff like with this large sort of full body fill, and then sell down. So there was no shocker that this move was going to come. This was the move that had to come because it's the same thing that I've been saying with the others. You come down, you find support, you move up, find resistance. Now you come down here. This is the leg that we're in at the moment. And this is the same thing as you saw with DXY. Not so much with gold. Gold's a bit wish-washy, but same thing, particularly with DXY, is this a level where we're going to get a higher low, these being the lows, this being the next low, and then a move back up? Or maybe not that dramatic, but maybe over here or something like this, another top over there, and we test these highs to see if you break through and get this move, or does this just say, hey, look, that was the end of the week. We don't put too much stock into the last hours, and really we're coming back down here to test these lows and potentially go down to the next level over here. Again, look, I know it's all wish-washy, but we just really got to sort of see. There's no sort of clear-cut sort of answer with these things. I think because you're chucking so much stuff into the mix at the moment with the fact that the US, the Fed just cut rates, albeit only 25 base points, they still cut. You've also got the idea of what's going to be potentially coming with Trump. And the sort of inflation and all this kind of stuff. So there's a lot to sort of weigh in there, and it really is quite a sort of turbulent sort of time to be trading at the moment. So I think sort of look early if we get out of this little falling resistance, this channel through here and above, I'm going to call that an early indicator above say 3180. I'm going to say swing highs here. That's where I'm going to be sort of looking to sort of see what happens. Obviously, it's not much of a move back up to the previous highs, 32. You got about 20-point move, come up over here. But that's going to be the early indicator. Like, not even just a poker nose out over here, and then, okay, boom, we get back sold back into it, whatever. But if it can sort of break out early, I mean, if you look at this, we have got a high sort of negative divergence through this area here. This is coming back. If this actually sort of rallies a little bit high, you can see that the buying pressure is still pushing up, up, up. That means they're absorbing this kind of sort of stuff here. It's not selling down and everybody's going for the door and completely oversold or pushing right down as of yet. So if this does get above that little wick high over here, this is going to be sort of obviously a little go off. I'll be looking to see what happens as it comes back up into 32.20. 32.20 is the level where you're going to go, okay, maybe there's actually something more in this. Maybe this comes up to these levels here, tests these areas where we've seen the sellers, where we've seen this be a sort of area that likes to sort of really swing the market one way or the other. And maybe that's the level, then boom, comes back down like this, and they really sort of shake things out, or they find support at least through this area here. But I think certainly the trade through here is above, 32.20 up to 33, and then see what happens from there. And that's a fairly decent trade. I mean, that if you sort of get the early alert, you put it on the screens, you watch it, you watch to see what happens, and let's say it does break through here, there's a 75 point move. That's 2%, just through this little range. So that's certainly a good trade if we can get this one here. But you got to get the early indicators and that, and you got to see that it's actually doing something. Because again, the flip side of things, just considering both sides, is this move here continues to dribble down. I mean, the RSI is pointing in the downwards point at the moment. We can potentially see DXY run a little bit harder. If that happens, silver continues its channel on the way down. Underneath 30.70, well, you set an alert here, and you've got a pretty clear-cut move, I would say, down to 30, 29.90, 30, 29.90, that kind of range there, which again, this is a fairly decent trade as well. This will be your short side move. That's another 2% move there. So, again, everything seems a bit wish-washy, but if you wait for these higher highs, the break of the previous high, or the break of those lows through the election period, I think there's got some pretty good trades on either side of that. So that's what I'm going to be looking for, those ones. Aussie, one of the ones that has just really smashed things. It's funny, it's I kind of sort of switched off a little bit earlier because of, as I said, you saw how quiet DXY was. I was like, look, it's been such a hectic week. I'm happy to just take a bit of take a bit of an early one on it all, and then you look back and this really, I mean, this is a great short through this period here. I mean, particularly if you look at the drop here, that the market was watching this. Yeah, I had price target up here a little bit higher, just based off where previous sellers had been. What I had the measured move of this channel to be. Obviously didn't quite get there. Got pretty close. Got 89, and we're calling it 07. So 17 points or so. So it's close. But as I said, this is the falling resistance. You can see the second this broke, it went bang down here. I mean, that's 46. That's 25 points or so down to the bottom side. Obviously rallied up, retest, and then dribbled all the way back down. This was also based off a little bit of China news that sort of came out towards the Euro session at 7 o'clock there. And that was, I think, sort of basically them, it's a bit late now, but something to do with them either moving debt, consolidating debt, or wiping debt. However, it basically equates to certain quantitative easing. And the easing obviously being weaker for the yuan, and obviously that in effect is going to have the flow on effects of that to the Aussie. So this is quite a decent sort of trade if you actually if I was paying attention, if anyone was sort of seeing that. So you got your bounce, and once it broke, retest, and then that's 66.52. That's a 100-point move just straight down to the downside there. And as you can see now, I put this little fib on it just before. This came up from this was the Trump trade. Oh, sorry, no, not Trump trade. This was the election. The bounce of the election comes right back up over here. This is about 1.27 retracement of that move. So there's a big bounce coming through here. And buyers have stepped in at the moment a little bit higher than where we had seen. Obviously the low of that sort of Trump thing, that election period. A little bit of bounce into the last couple of hours, but again, as we say, we don't really worry so much about the last couple of hours. So we just got to see what happens on Monday through Asia. So above, 66.17, take out the wick high of this 4 hour. You could be effectively sort of saying that, we got one low, high low. You get above this wick over here, then realistically you should be tackling and seeing what happens back up at 66.80 again. To see if then you're going to have resistance, support, double top, lower high, higher high. It flips the market back on the other side because obviously we've been in such a big sell down for so long. We've broken through, we've put in, 3 higher highs in a row, but at the same time you had a lower low in the middle of that. But if we can sort of double it up, because you need the two parts, you need the high high and also the higher low. We've got the high high now. We've got the high low if this holds. If we see DXY run and break to a new high, well, Aussie's just going to come down like this. We're going to look at sub 65. If it can get above this 4 hour candle, so above sort of 66.20, that's where I'll be looking. That's what I'm going to be starting to look for to then sort of get down on the lower time frame, see if we can sort of target things to sort of really get back up and retest this 66.80 level. I mean, if you go past 66.80, well, okay, we can work out where we could potentially be up after that. And we do know at bottoms with Aussie, deep pullbacks are just part of the game. We've seen it a number of times with maybe not this one. This was a little bit insane with it all, but as you can see, sort of with the breakouts and sort of coming off the lows, deep pullbacks are just part of it, particularly when you're trying to spin the whole thing around. So I cleared my charts the other day, so I can't reference things straight away. But beside the point, what we're looking at here is potential for a medium-term bottom. If we see DXY continue to be sold down a little bit, if DXY goes for a higher high, well, we're looking down at at least 64.80. Those are the lower levels there. All right, copper, and this has just been insane. Like I haven't been in copper since back over here, so I missed this break. Move up to the top side here. I said, oh, it's a heartbreaker, man. That sucks. Very disappointed I missed it. And then came crashing down like this, and I'm like, well, I'm glad I missed it. This was the move I was looking for, coming through, I think, on the Thursday. Came up here. If you got in a smaller time frame, this little move did happen, like it gave a little bit of reaction, but it was minuscule, like this. And then obviously fired up here a little bit further. And the bounce actually came a lot higher than I thought. So, I looked at this. This was like 5.7% or something like this. It was insane. Yeah, it was one of those 5.7, 5%, 3.3%. I mean, those are just crazy, crazy trading this week. And realistically, we're back down at the lows of the previous range, technically below where you would have wanted it to hold. It's hard to sort of say that, as I said, look, you don't think much about this last hour or so, but the fact that it really closed down on those lows looks pretty bad for it. This level that it did actually hold, let's just make this a bit lighter. Make it like this. Actually, no. Something like this, whatever. That'll be fine. Where it has sort of bounced from the lows down here, you can see this is actually, since it had its sort of sell-off down in August, where we came back from that massive breakout, it's put in a low, put in a high low, and it's now kind of respected this level again. A little bit of an overshoot, that's fine. Like when you've got these sort of big news-driven things, and like it's the election, that kind of stuff. If things overshoot a little bit, you got to live with it. It doesn't have to be right to the very cent and that to be exact science. However, if it goes down under here again, you're breaking this rising support. Plus, you're breaking the actual shorter, closer time frame, this through period here, lower low. And we've already got the lower high. So if this comes down through here, there's a little point thing, maybe you start to see something to this sort of effect. Excuse me. Through here. And we start to see a little bit of a stuff around here. Copper can typically do a lot of these little fake out moves in terms of channels. Typically does it more on these kind of moves up here. Remember, this was even one here. We were building off this one, and then it came out the bottom here. Then obviously fired back up. So we moved the chart a little bit afterwards. But yeah, look, it's still nothing really sort of super exciting here. I mean, effectively, if you really just take away everything, if you actually do this, it's just sideways, sweep, 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 boom. But it's still just in this big sideways grind at the moment. You need to take out these highs over here, the 447 and 452. If you can take out those highs, then we can say, okay, this is stuffing around. You're moving up. You got this falling resistance, just as much as this one's been respecting the falling rising support. Well, you've got this high up here. So back from that actual spikes high as well, back in May, touching down here. So I think we're gonna be getting close, but I wouldn't be surprised if this triangle gets filled out a little bit more. Which again, this sort of makes me think that if this does happen to play out, and we do see some rally, and we do see, something to this kind of effect, say it comes up here, say it comes up and rallies and breaks out, it does this kind of thing, but effectively moves up like this. This could be what we're looking at moving forward, which again is just more in that range. Fake everybody out, get the little highs, move up here, push back down. I mean, this could take a little while longer. It could be here, which is then in line with these horizontals as well. Don't know exactly, But the point is that if we take out the lows down over here, 426, okay, well, game over and bang, we're moving down. I think there's a higher likelihood that we see a continual play and stuff around of this stuff moving over the next couple of weeks into December, potentially. The next 3 weeks, I could see this just consolidating further and further through here. Yeah, we'll have to sort of see how this one plays out. But again, it's the heartbreaker for a reason, because it's very hard to get on these things and hold it. Obviously, when it moves, it can move, but it's doing a lot of grinding at the moment, so it's very wish-washy. Flip across, we've got China, and China, look, it broke out massively off that move from the election. Sold down heavily, as we saw, same with DXY, rallied back up. It's in double tops period at the moment. So really, this could go higher. The fact that, yeah, so this could go higher. The fact that the last 4 hours sort of just sold down a little bit. Again, you just don't regard that too much. It was going quite bullish coming up to the top over here. So if you actually analyze the chart and look at it, yes, okay, we'll come up here, double top. Look at how weak, though, the buying pressure is to get it back up to that same level. Now, it didn't technically put in a new high, but again, we've seen this happen before, that it doesn't necessarily need to do that sometimes. This has come straight back up to the same level on much less conviction, much less buying power. So if this does happen to roll over from here, and rolling over will be under sort of 718, yep, and that's how we spell confirmation at 12 in the morning, 12:30. Add to dictionary. No, I don't think we need to add that one to dictionary, right? Confirmation. Whatever. That's good enough. Look, if we sort of come back down under this 4 hour wick, similar thing, and you see how a lot of these charts tend to sort of come up very similar, but in other directions. You can use each as an early indicator for the other. This is on a low RSI read. It's below 50. It's got back up to its highs over here. This could do one or two things from here. I know that's a great sort of analysis of stuff, but that's life. This could do one or two things. One, flip, and then bang, we continue on. If this happens, similar thing is going to be US dollar buying strength across the board. We're going to see DXY break higher. We're going to see Aussie break its lows. And we're going to see that sort of continuation of those sort of US dollar strength moves across the market. The other one is that the market may just roll from here. If it does, similar sort of thing. First target is those swing lows. Same sort of thing with the DXY. If we go back to DXY, it's a very similar sort of story. Is this going to be a double top? If it does, first target is those swing lows. So yes, this is US dollar against China with it all. If that does roll back down here, obviously then you're looking at, are we going to do a range of this top area here? Which, as we just sort of saw with copper, range is very much looking like a potential thing. And copper and the yuan, obviously fairly tied together. Alternatively, it flips and breaks and moves higher. If it does, what you'll see is this RSI will no longer be a potential double, a negative divergence. You'll see this continue and start to move up here. The risk with that then is that because this is obviously quite low, it's got room to continue moving. So it just means that if this breaks, even though it's a deep pullback, that this could then break and move up to the top over here. This is the kind of target you'd be looking for, up around 726, which takes us way, 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 way back to, this top level over here where was that the grind level? No, the grind level was up over here. But yeah, we're sort of looking at, let me get back to it. Yeah, 726 would be the top side target that potentially be looking for over there. So again, if it takes out that 4-hour wick, that's the idea that they will be targeting down here. You break down here, well, again, you come back down to where the election move kind of moved from, which is back down at 709. So we'll see how things open up on the Monday. All right, look, that's pretty much it. It's yeah, definitely need to get these things down a little bit earlier because I'm absolutely wiped from it all. But I've got a good idea about it all, even though it's a little bit sort of a little bit of foot in both camps and that coming into the week. But let's just have a quick look at what news we have sort of coming through. Inflation expectations, again, stuff. Maybe a little bit of China data sort of might affect things come Monday, but not a great deal of mover stuff there. Consumer sentiment in Aussie, something to look at. We haven't got a forecast on this one as of yet, and also business confidence. These things again, look, this one's consumer sentiments, I think a little bit high. I don't know what we gauge it. Where did it come from recently? That is sort of ticking up. So remember, with Aussie, the RBA is still very bullish. It's very hawkish. So that is something that does sit in the favour of sort of Aussie not getting completely crushed. But again, it is the weaker, obviously, of the two. So even with the sort of hawkish RBA, if they decide to start buying US dollar across the board, Aussie's going to really sort of be testing those lows. Moving forward, what have we got? Tuesday there, Wednesday, a couple of Fed speakers. Again, nothing massive. Wage price index. So I guess this is really the big one on the cards at the moment, the CPI. So look, they're looking for this to be sort of flat. This is the one that's really going to be the mover for the week and that people are going to be talking about, because if they find that the inflation is just really grinding and not moving any further down, then they're going to start to sort of hear talks of sort of like, well, maybe the cuts have been too much. Maybe they're more looking at a pause for their next rate decision. If they can't keep cutting if inflation's just not reacting to it at all. If it does come down, well, we'll see US dollar weaken up a little bit on that. But as you can see, expectation is just flat. And I think flat at the moment is probably more in the hawkish camp, because they want to see it continually coming down. It's all very well that, hey, we've cut, but if you've cut and it's just, okay, yes, it's not going up, but it's still not coming down, maybe a pause will be the right sort of move for it. We'll have to see. Flip side of that is it does come down, and they go, wow, this is working. The cuts are good. We can withstand another 25 base point. Employment. Oh, geez, this is almost like a fun game. Every month and that, let's spam 20,000. They're going to get it right one time. I don't think it's going to be this month. I think they're just going to be dead wrong again. I mean, look through the sort of previous numbers. Look, these ones have been revised a little bit, revised down. But every time, 20, 20, 20, 58, 50, 47, 64. They're just clueless. Anyway, so this is going to be something that we're looking for Aussie. Unemployment rate's the big one of these two. Like, they're both kind of big ones, definitely. But look at that. Aussie actually put in 4 times as many jobs as the US did, apparently. It's crazy. Unemployment up is what they want to see to give them more of an idea that they need to act and do something. By act and do something, they mean sort of lower rates. Take the foot off the gas a little bit. So if this remains the same or even goes down, that's going to be bullish for Aussie. If this moves up, it's going to be weak, and it's going to be something a little bit sort of bearish for the Aussie. So it's definitely something on the Thursday morning to keep an eye on. We got PPI, so it's producer price index, looking pretty flat. Not much of a move up there, and too early to get their sort of forecast of these kind of things moving through here. Bit of China data into the end of the week. A little bit stronger, looking for China. So again, stronger for China, stronger for yuan. Yuan will be stronger for Aussie, stronger for copper. And that's how that stuff will play out. And moving forward, we've got a bit of retail sales for the US coming into the end of the year. So I was listening to somebody actually just the other day, and they were sort of talking about how, like, they're just going to be spending hard in the US now that, they've got the big thing was the uncertainty. Everyone's crying about cost of living, but now they're going to be potentially sort of flying on this sort of euphoria of like, wow, everything's going to be solved now. They'll go out and spend like before they can even do it. This is a delayed reading, so this may not sort of see the effect in this one, but certainly next month and the month after, and that is potentially when you start to see retail sales tick up a little bit. But as they're looking at the moment, it's looking to sort of tick down there a little bit. So nothing too exciting there. All right, that's it from me.